Okay, so welcome everybody. This is Ashley Brown. I am a trainer with LuLaRoe. I'm so excited that you have joined us. We have a special guest today. His name is Jake Bassett. He's amazing. He's our tax guy, and you're going to want him to be yours. In our first year of LuLaRoe, we started in January of 2016. We never expected to take off like we did, and I'm so thankful that we did, but holy cow. So here we are. 2017, and it's time to wrap up taxes. It's kind of crazy how much stuff there is, and what do you know? Who do you ask? There's so many questions. So I'm going to pass it over to Jake. I found him, and I wish I would have found him last year. He is so great, and I'm excited that he is joining us today. So Jake, go ahead and take it on over, and we'll get started.
Okay, can everybody hear me? It looks like it switched over.
We can hear you, but we can't see you.
How do I get it to show me then? Sorry.
So in the bottom,
we went over this yesterday.
In the bottom corner, there should be a little box that says Start Video.
Ah, okay.
Perfect.
This is my first time on Zoom, so. Anyway, I'm really excited to talk to all the LuLaRoers. That's basically what I've been doing for the last couple of months. Hopefully some of you guys have seen the blog that I did on shoptherow.com. My best friend actually is the one who created shoptherow.com, which is kind of how I got into the whole LuLaRoe business and helping people out there. Now a little bit of my background is 10 years ago, I was approached by some of my friends who started a multi-level marketing company or direct sales company, kind of like LuLaRoe. And they asked me if I could help them with their taxes because they did not have a person that could understand the taxes the way that needed to be understood. And also all of the CPAs that they were talking with were very, very expensive, $2,000 a year, you know, and that was just way too much for their clientele, the people they were trying to get, the consultants they had. It was just too much for them to be able to afford that. So I came in with I learned the business. I came in with a lower price point, and we started to really grow like crazy. Now, if any of you are, I'm located in Utah, and if any of you are familiar with Utah, there are Mormons in Utah. Not sure if you guys knew that, but down in Provo, Utah, that's where BYU is, and that's where it's like the Mormon capital of the world. So these Mormons come home from their mission after knocking doors for 2 years, and they go to BYU, and then during the summer they'll go and knock your door and try to sell you like pest control or solar systems or direct TV or, you know, their direct sales. It's very similar to the way LuLaRoe functions. They're considered consultants. They're paid at 1099 just like you guys are. They're self-employed. And so my business really grew around helping out those people. And so for the last 10 years, that's basically all I've been doing, is helping out consultants who do sales, consulting sales, LuLaRoe, Rodan Fields, doTERRA Oils, Aptive Pest Control, Vivint Alarms, Vivint Solar. Okay, that's a little bit of my background. So that's why people have been coming to me, because I'm able to explain it in a way that helps you guys understand how you're going to handle your bookkeeping correctly. There's a whole heck of a lot of advice out there right now that I consider bad advice. You know, they're telling you guys to go and get Quicken or Wave Accounting or go get QuickBooks Online, or, I mean, honestly, there's a lot of advice out there, and they don't understand your business. You don't need that stuff. And I'm going to talk to you about how we're going to really keep everything simple. Your accounting is going to be one of the easiest things that you do. It should not be one of the hardest things that you do. And I feel like right now that's how a lot of you guys feel. I'm also going to talk about an LLC. A lot of people approach me and say, you know, I've heard differing opinions. Should I have an LLC or shouldn't I? And so we're going to kind of go over that. So I'm going to start there. And sorry, literally I've been on the phone 24/7 for like a month and my throat hurts. Half of that time it's been laughing at Ashley Brown because she's funny. So, all right, so I'm gonna share my screen real quick. I've prepared a really complex, I took a lot of time putting this together, so you guys are gonna really love this right here. So how do I show my desktop? Oh, right here, here we go. Oh, this is so easy. Okay, so hopefully everybody can see that. Can everyone see that? Ashley, yes? Okay. All right, so yeah, I put this together. I mean, it took me a long time to handwrite this out. One of the things I actually do is I'll go across the country and do presentations just like this. I normally have a whiteboard. I actually bought one, but if I fill it out, it's in reverse, it's in mirror, so then you can't even see it. So it was a waste. See, it's brand new. Anyway, so it's easiest if I just show my screen. So anyway, so the way I explain it is, let's talk about what happens right now when you don't have an LLC, okay? So you're considered what's called a sole proprietorship, which means all of the income you make is in your name and social. And so just using this example, let's say you're Ashley Brown, your gross sales with LuLaRoe were $120,000. You guys have 100% markup on your wholesale cost of inventory. So you're going to have and that's roughly, I know leggings are cheaper than other things, so it's not exactly right, but this is close. So you're going to have $60,000 of cost of goods sold or inventory purchased and sold. So your gross margin would be $60,000. I always get asked, what is gross margin? Gross margin is a retail term. It's a term used by retailers who have inventory. So I think it's something it's a term that you guys could use, but 60,000 of gross margin. And then after that, you're going to have your expenses. And I just kind of lumped together 10,000 just for nice round numbers, but expenses are going to be anything from racks, mannequins, onboard fees. You're going to have shipping costs. You're going to have, if you're using Shop the Row or Audrey, you're going to have your monthly subscription fees to that. Maybe you have accounting services. You've got your cell phone bill. You've got business use of the home. I mean, I could go on and on. And by the way, at the end of this, we're going to have a little bit of a Q&A. So I know some of you are going to ask me, what about this or what about that? So we'll hit that up at the end. So again, back to this little scenario, your net is 50,000 under this scenario here. Now remember, all of that income is in your name and social. So that means all $50,000 is going to be subject to 3 different taxes. One of the taxes is the normal tax, income tax, okay? Income tax is what every one of us are about to file, and it's due every April 15th. The other 2 taxes is Social Security and Medicare tax. It's a tax that when you guys are W-2 employees, it comes out every 2 weeks and you don't even think about it, right? You don't even notice it. You just file your taxes once per year and you're done. Well, Social Security and Medicare tax is paid quarterly. So some of you guys have heard about people who do quarterlies. Businesses do quarterlies. Well, guess what? You're a business. So you should be doing quarterlies. But as a sole proprietor, you actually don't. You pay this tax along with your tax return. And some of you, this might be your second year doing something like this. You've already filed your taxes once before. You've already been hit hard with that Social Security and Medicare tax. Honestly, you would be my favorite client because you're the one that I can save a whole bunch of money on, and you know what it's like to pay $7,650. So again, back to this Social Security and Medicare tax is 15.3% of the income you make. So 15.3% of 50,000 is $7,650. Then on top of that, you'll have income tax. So this is why when you ask your mom, hey, I'm doing LuLaRoe, how much do I need to set aside for tax? And your mom says like 35% or 45%, okay? They're saying that because your parents know that there's Social Security and Medicare tax, but in reality, it shouldn't be that much. There's a way to get this number down. So we'll go to my other slide that I made. So you have on this other side, now we've set up an LLC. Now, technically we've set up what's called an LLC as an S Corp. A lot of people ask me, what's the difference between LLC and S Corp? The truth is, an LLC is a term that's only recognized by the state. So, for example, if you're in Utah and you form an LLC, the government, the IRS, will say, okay, you have this LLC, but do you want to be an S Corp? Do you want to be a partnership? Do you want to be a limited partnership, general partnership, on and on? There's all these different formations you can have, but LLC is a disregarded entity for tax purposes. So if you set up an LLC in your own name and that's it, it wouldn't help you. You would basically be like, you're in this left column here on my computer. Anyway, you're still a sole prop, so you're still going to pay self-employment tax. So what we do is we set up an S corporation. Now, when you establish an S corporation with the IRS, what you're doing is you're creating a separate entity. So imagine you've created another you. Now you still own this other thing, but it's never going to get old. It's never going to retire. And therefore, the S Corp is never going to have to pay Social Security and Medicare because an S Corp's not going to need that. That's kind of the way the IRS looks at it. You still own all 50,000 of net profit, so you're still going to pay income tax just the same, but the self-employment tax is different. So I'm hoping that kind of makes sense. You don't pay self-employment tax when you're an S Corp because it doesn't get old and retire. Like, that's the best way that I can explain it. Now, I put this little star down here, okay? Because usually I'll get to this point and I'll say, see, it saves you $7,650. Now, that's the gist of it. That's the gist of why you want an LLC. However, you must pay yourself a salary. So this is where I can lose a few people because it's a weird concept, and it can be confused with how you are drawing money out of your bank account. Okay, when you take money out of your business bank account, that you're saying, well, I don't pay myself anything, or I pay myself $500 a month as a draw. This is totally different. What this is we have to say, okay, Ashley Brown Enterprises LLC made $50,000 of net profit, but Ashley Brown was the one who did all the work for that S Corp, right? So wouldn't that LLC, remember, this is a separate entity from Ashley Brown. This is not Ashley Brown. So wouldn't that separate LLC pay Ashley Brown to generate and work for it, generate the $50,000 of income and work for it? Yes, of course it would. And so the IRS says you must pay a reasonable salary to Ashley Brown. Now, the question is, what's reasonable? Because you're going to pay this 15.3% on the salary. So what you want to try and do, obviously, is pay yourself the smallest salary possible. But the IRS guideline says it must be reasonable. So some people will say, well, okay, 75 grand, that's my reasonable salary. Well, the business only made 50. So if you were this business, would you pay Ashley Brown 75 grand? No, you're going to pay her based on the profit that was generated by her. So because we have lots of experience at my firm here at JB Accounting, we have calculations and certain limitations on what we would do as a salary. We talk to you about how many hours a week you're putting into the business, how often you're working, and then we try to come up with a salary that is reasonable. We don't want to lie. We don't want to cheat the IRS. People want to go to sleep at night knowing they're doing this the right way. And so that's important to us. So on this, let's just assume that it's that Ashley's working, 20 hours a week. It's kind of a part-time gig for her, and she was able to generate $50,000 of net profit. So we would figure out a good hourly rate for that. Let's say it comes out to $20,000. So here, let me unshare my screen real quick. Okay. All right, so this is where, again, it can be kind of confusing, but the basics of it is you're going to pay that 15.3% on the $20,000 instead of paying 15.3% on $50,000, thus saving you 15.3% on the difference, which would be $30,000 times 15.3%. which is something like 4,560 or something like that. So it can save you a lot of money to have an LLC. There is kind of a break-even point though. So you don't want to set up an S Corp if you only have net profit of $5,000, because 15.3% of 5,000 is only $765. So, and the charges to have an S Corp are about that. In fact, this is a good time for me to go over, if you do set up an S Corp, you are going to have to pay for quarterlies. Remember I mentioned quarterlies. And when you're doing quarterlies, what you're doing is you're reporting the $20,000 wage I just talked about. You're reporting that that wage was paid, and you're paying in your Social Security and Medicare tax every quarter. And I charge $55 to prepare those quarterlies. So you're $220 for quarterlies. And then at the end of every year, you have to file an S Corp tax return. So that's different as well. The S Corp will actually file a separate return from your personal. And we charge $275 to do that. So it's about $495 a year to have the S Corp. So as long as this S Corp saves you more than $495, it's worth doing. And we like to have individual conversations with each one of you that are interested, and figure out your situation, try to figure out what your net profit was, and talk to you about, will this save you money or not? And we're really good at not setting you up with an S Corp if that's what you don't need just yet. Like, we want your business, we'd love to have you, and we want to have you forever. So we're going to do what's best for you. So hopefully, we'll go through Q&A again, but I'm hoping that you guys all understand the gist of how an S Corp saves you money. Now, I'm going to lead into a couple of other questions that I get all the time from LuLaRoe people. And it usually almost always covers bookkeeping, inventory, giveaways, and stuff you take and use for yourself, okay, and how that's handled. And again, there's a lot of advice out there right now of people saying, go get QuickBooks Online, get Quicken, get QuickBooks Desktop, use this software, Wave, or something like that. And 9 times out of 10, the LuLaRoe person doesn't have enough understanding of even really like basic bookkeeping. And so why would you jump into QuickBooks Online or jump into Wave? Like, it's not worth your time. You guys are good at selling clothes. So why don't you sell clothes and focus only the amount of time that you need to on your bookkeeping. And so I'm hopefully going to give you guys some advice that'll help you do that. And then as you grow your business, there'll come a time when you tell yourself, well, I'm doing so much work now, maybe I should just have somebody else do my bookkeeping. And you'll know when that time comes. You'll know when you're so busy, you're doing $150,000 in sales, you're just making lots of money. It's not worth even your 30 minutes a month to do your own bookkeeping. That's where you can use someone like me who's set up to help people with bookkeeping. So, okay, keep it simple. I don't think you guys want to use QuickBooks. Don't use Wave. Instead, this is going to sound really weird, but I want you guys to take it back to the 1800s. Like, I want you to go all the way back to just pen and paper. And okay, you could use Excel, but I don't want you to go anywhere beyond that. I don't think it's necessary. What's important is that you have a separate business bank account. And it sounds like LuLaRoe is telling you guys to do that, because I don't think I've talked to a single person that doesn't have that already set up. That's important. Have that separate business bank account. The key there is never use that business bank account for anything other than business. Because I promise you, when you're doing your bookkeeping in the month of December for the month of January, because you procrastinated till the end of the year, like most of you probably did, right? Yes, no. So you're not going to remember what you bought at Walmart for $50 in January, right? You're going to look at that and go, oh, shoot, I don't remember. I know I have my receipts somewhere in this shoebox over here, but I wouldn't know the first place to start. So it's important that you do this monthly, that you do your bookkeeping on a monthly basis, and that you keep things separate. You need to be able to trust that everything in that business bank account was used specifically for business. So again, we're going back to old school. You're going to print off your bank statements, and you're going to put that on your desk on your left-hand side. And then you're going to have your piece of paper on your right-hand side. And let's say it's February, the first week of February, so we're going to do January's books. Then you're going to make sure that every single number that's on that bank account goes onto your sheet somehow. And so all the deposits you get, those are going to be, that's your sales, right? That's all income. Those should all be LuLaRoe deposits, hopefully. So on your sheet, you're going to write sales, $10,000 for January. Then you're going to have all your withdrawals, and you're going to make sure that every single withdrawal that's there goes onto that sheet, and you're going to categorize it however you want. You're going to have shipping expense. There you go. shoptherow.com fee. There you go. You're going to write it down on that piece of paper, and you're just going to make sure that all the withdrawals are entered in there. And you're done with your bookkeeping for the month, and you can move on and go back to selling. You don't need to go through and enter that into QuickBooks or Wave, because that's actually exactly what those things are doing, what that software is doing. What QuickBooks is doing is they're having you enter in the bank statement charges into this bookkeeping software, that they've created categories, and they make sure that the debits and credits are right. But you don't need to have a balance sheet, and you don't need to track your assets and liabilities and your owner's equity. Those are things that just don't really apply to LuLaRoe people, but QuickBooks helps you manage that. If you had like a boutique, a store, a storefront, and people were coming in through the door and shopping, then yeah, you've got to have QuickBooks. You have to have a POS. Your accounting has to be a little bit more together. But for LuLaRoe, it doesn't need to be that complex. So again, now I'm going to lead into the hardest thing that you guys do, the hardest part of your bookkeeping is inventory, by far. But I'm going to simplify that too. So when you're doing your bookkeeping for the month, every time you see inventory purchases, I want you to put that on your piece of paper or Excel as inventory expense. So every single time you buy inventory, it's going to go in as inventory expense. And if any of you guys are accountants out there right now, you're saying, well, wait a second, that's not right. It's supposed to be inventory. Okay, so inventory in asset. But that's, again, we don't need to even do that. This is to help you simplify it. So every time you buy inventory, you're going to record it as inventory expense. Then one time per year on December 31st, you're going to count your inventory. So you're going to add, you can do it multiple ways. Hopefully you're using something like shoptherow.com to track your inventory on hand, and you can just pull it up and it's done. If you're not, you can go through and add up all your pieces and multiply that by how much those pieces cost you. But you need to know what your wholesale cost was as of December 31st. And then you would send that to your accountant. And I would take your inventory on hand and take that out of inventory expense when I go to do your taxes. And what's nice about this is if you do it that way, what you've done is you've just accounted for all of your giveaways, and you've also accounted for all of your personal use items by doing that. Because when you do a giveaway, that goes out of your inventory on hand, right? You go and you give it away. When you do personal use, you've taken it out of your inventory on hand. So we've recorded every single thing as inventory expense. And then at the end of the year, we have inventory on hand. So inventory expense minus inventory on hand equals cost of goods sold plus giveaways plus personal use. So you don't even need to be tracking those things separately. Okay. That would help you. Now, there's definitely one thing that I do think you could use, that you probably should track separately, and that is the personal use items. So you probably do need to, on a separate piece of paper, keep track of all of the items or the pieces that you use for personal, because technically you're supposed to run as a cash sale. So you run it as a cash sale through Audrey at wholesale cost. And the reason you do that is so that you do actually pay sales tax. See, that's the problem. You don't pay sales tax when you buy it from LuLaRoe. So when you took it for personal use, you were supposed to pay sales tax, and no one has. So if we're doing this 100% legit, we got to make sure that the sales tax gets paid. That's one way to do it, is to take your personal use item and run it through as wholesale through your point of sale. The other way to do it is to add up all of your personal use items, and then on your state tax return, and almost every single state has this, there's a little line item that 90% of people are not doing correctly. Well, probably 100% of people are not doing right on their taxes, is a spot that says items you've purchased online tax-free. So I don't know if you guys knew this, but when you buy something online from, say, I don't want to use the example of Amazon because they've been a lot better at it, but let's just say you buy something from Walmart, Walmart, California, okay, and you're based in New York. Well, you bought a basketball from Walmart. They're not going to charge you sales tax because you're not from California and you're not subject to California sales tax, so they don't charge it. But the idea is that you are going to pay use tax on that. So you're supposed to report the cost of that basketball on your tax return. So it's the same thing with these personal use items. You could just add up your wholesale cost and then tell your accountant, I have these items that I need to pay sales tax on, and you throw that onto your state return. What that doesn't necessarily help you is it doesn't come out of your inventory that you have in your system or whatever software you're using. So it's completely up to you what you do there. But again, I just suggest that you just simplify things as much as possible. Don't overthink it. It's not worth your time at all to spend a lot of time doing bookkeeping. You need to still get it done. There's no doubt it has to be done. And I do recommend you do it monthly. But if you do it my way, printing the bank statement, having the other piece of paper on the other side, and just making sure that all the debits and credits that are on that bank statement get put onto that paper, it'll take you 30 minutes and you'll become pretty good at it. And you can easily add all that up at the end of the year, send it to your accountant, and you would be done. So hopefully that helps you guys a little bit. Honestly, that's all I have for my presentation. Again, the big thing is hopefully you understand now when it's good for you to have an LLC. If you're making a lot of money or making just more than $7,000 net profit, it's worth it for you to have an LLC as an S corp. You may go ask your accountant, and he might say, "Oh no, you need to make way more than that for it to matter, and for it to save you money." And the reason they're saying those things is typically because that CPA or H&R Block or whatever charges a heck of a lot more than I do for an S corp tax return. My company, this is what we do. We help direct sales clients. We've been doing it for 10 years. We have thousands of clients. We're actually the fastest growing accounting firm in Utah 2 years in a row, something I'm pretty proud of. I think it goes to say that there's not enough accountants like us that specialize specifically for people like you that need this help. We prepare tax returns in every single state. I used to say that we did them in every state except for South Dakota. But I have two South Dakota LuLaRoe people now, and I'm super proud of that too. So anyway, we're excited and we're glad to help you. So I'm going to open it up for a Q&A here in a second. So I'll pass it back to Ashley.
Okay, awesome. You are the bomb. And you guys, I'm going to say really quickly, go ahead and drop any comments or questions that you have. Go ahead and put those in the chat. We're going to start getting to those, okay? We've blocked an hour for this so that he can answer your questions as we go here. It'll be helpful on the replay as well. So ask away, okay? Because there's a chance that you're going to ask questions that people have that haven't been able to join us. I'm going to brag on Jake for a second before I ask him a question. So literally, you guys, I looked and looked and looked and looked, and we've hired a couple of CPAs and bookkeepers, and it's like they were speaking Chinese. Like, I don't speak Chinese, guys. I don't. So when I talked to Jake, I I'm not discounting myself by saying he dumbed it down, but he got on my level, okay? He got on my level. So yes, it's taxes. And this is like a little serious tax talk. But when he personally takes you on as a client, he's going to get to know you, and he's going to break it down in terms that are easy to understand, and he's not going to just leave you hanging until he knows you get it. So I just have to put that out there. So Jake, I did want to ask you, I know you've got about 10 years of experience, but can you tell me, in your experience with direct sales businesses and business owners, what are some trends that you've seen over the last 10 years?
No, yeah, that's a great question. So I get asked that a lot by people who are starting out with direct sales or just jumping into, maybe they're switching over from Rodan Fields to go and sell something else similar. They'll ask me like, what have you seen with LuLaRoe people? Or what have you seen with Vivint Solar or Clear Solar or something like that? And it is I'm in a unique position because I have 10 years worth of data that we've been gathering. And I make sure to track data. Like we track how much people are making across, which company they're working for. And we track how much they're spending. So we know which companies spend the least amount of money, but create the most amount of revenue, and over the course of so many years. And we can also track how much money you can make over the course of many years. Okay. Now, what usually drives multi-level marketing companies is that there's a bunch of people out there that are making tons of money. That you'll see the superstars, right? The ones that have shot to the top, the ones that are making, $15,000 a month bonus checks with LuLaRoe. Like those are the ones that motivate people, see that and say, I want that, or at least a piece of it. I'd be happy with 5,000 a month. I'd be happy with 1,000 a month in extra bonus check. So they jump ship and they go to LuLaRoe. And what we usually see is that the common person, the person that's not going to be like that superstar, maybe they didn't make it in soon enough, maybe they're just not as great a salesman as this particular person is. We're all different, right? But we see people get discouraged quickly, and in a year they're gone. So we always tell people, based on the data we have, you have to give it 3 years. No matter what you're picking, it's 3 years. And you need to make sure you understand it's going to take a lot of hard work. That superstar that's bringing in $15,000 a month, they're working really hard. Like, for example, Ashley, what time was it when we were talking last night? It was something like 2:30 in the morning.
Yeah.
And
we were working. It was 3 o'clock in, yeah.
Yeah, it's been that way. We're talking about work and talking about business at 2 in the morning. Like, I'm not saying that's what it necessarily takes, but usually that's the common denominator, is that you have someone who is working more and working more and working smarter, working harder, all that sort of thing. So definitely I'd say give it 3 years. And if you're still unhappy after 3 years, then maybe that's not the best thing for you. And sorry, maybe that's not what Ashley wants to hear me say, but that's kind of what we feel is like, don't give it 1 year and then say, oh, I didn't make my 5,000 a month bonus check, so I'm out. Like, that's not realistic. In fact, so we have this, again, more data that we can go off of, and I have the 2 most common reasons for leaving or losing interest. Number 1 is not feeling accomplished or not feeling taken care of. And usually that falls on the manager or trainer or coach in your guys' terms. So, that means Ashley's not motivating you guys hard enough, or, your coach isn't there for you. And so you don't really like where you're at. Maybe your Facebook group isn't as active as you want it to be, that sort of thing. So that's number 1, but number 2 is equally as important for why people leave, and that's not making enough money. They're just not making enough. And it really hurts when, you made your first $20,000 and you go to do your taxes and you owe $6,000 and you're going, what? I worked really hard for that 20,000. And so people will leave because they felt like they didn't get to keep their money. That's where having an affordable LLC taxed as S Corp option comes into play. So we can help you keep more of your money, which will help you stay longer term. Sorry, that's probably a lot longer answer than what you were expecting, but
No,
I get passionate about this stuff.
Your taxes are just so exciting. Okay, no, I appreciate that. And you guys, as he said, that might not be what Ashley wanted me to say. The other thing that I love about Jake, you're just going to get the honest truth. And so he's the numbers person. He's awesome. Okay, so let's attack some of these questions on the side. It looks like Jake, can you, do you have their chat open on the side there? If you hit the chat button, it should pop up for you. We've got a lot of questions regarding LLCs and S Corps. So I'm just going to go ahead. We will start out at the top. I did want to start with this question. So what if they did not have a separate business bank account?
You're picking those questions then from there? Okay. Cool.
Yeah,
okay.
I'll pull them from there, and as you're answering, I'll kind of try to combine them to make sure that, we're being efficient here.
Sure. So if you didn't have a separate business bank account last year, don't be super discouraged. It's just going to make your bookkeeping harder. Like I said, that's the whole reason of why you want to have a separate business bank account, is to make it so that you can easily sit down with your bank statement and add up all of your expenses. Now, since you don't have a bank account, you're going to have to print off your bank statements, and you're going to have that separate pen and paper, but then you go through and you highlight what was business. You highlight what was business and leave what was personal. And then you're going to have to take what was business and add it to your sheet, however you're doing it, your expense tracker, however you're doing it. That can be difficult, again, especially if you procrastinated and you're doing February's bookkeeping in the month of January the next year. I promise you're not going to remember, oh, shoot, was that business or personal when I went to Walmart or when I paid for this ticket? I don't remember what I did in February. So you got to be, that's why the separation really helps. If it was separated and you still procrastinated, then you would at least be confident that that was a business expense because it was through your business bank account. So it's important that you have that separate account going forward. Perfect.
Okay. There was a question on here about how to set an appointment with Jake. If you are on the link to the events that had this posted, I'm going to be posting a questionnaire that will go straight to Jake. Okay. So you can fill that out when we're done, and the info will go over to him and he'll be able to contact you through that. Okay. If you are watching this via replay and it's uploaded, there should be information in the title on how to get in contact with him. Or you can, of course, always find him, JB Accounting and Tax, correct? Or Tax and Accounting. See?
Yeah.
Small details. Yeah. Okay. So you can find him. All right. So like I said, we've got a lot going on over here with LLCs and S Corps. One question was, we'll kind of attack this from beginning on through. If somebody's in the queue, would they be smart to establish an LLC for S Corp before starting and buying any supplies before onboarding?
So I would say no. You don't want to go with the LLC as an S Corp until you've made enough money for it to make sense to be an S Corp. So from an accounting, from a tax saving standpoint, I'd say no. Aw, Christy, who's that little boy? That's cute. Sorry. She's holding up a little boy. Anyway, so no, I don't remember what I was saying, but
no, that's fine. I think you covered it. So it doesn't make sense until you've made the money to afford it. That's.
Oh, I was going to say this though. Sorry, one more thing. If you talk to a lawyer though, he's going to say, yeah, you want an LLC because that's going to protect you from lawsuits. And you guys actually do have some exposure, because if you have a party and someone comes over to your house and trips and falls and they blame it on you and your house and they sue you, which that does happen. Trust me, I've seen it happen as an accountant. I see it all the time. So an LLC protects you from that stuff. It protects your business might have to pay, but it protects your husband's income or your wife's income, or it protects your house from being taken in the lawsuit. So an LLC might be a smart thing to set up before you go into business if you're looking at it from a liability standpoint.
Okay, perfect. Another LLC question. I'm kind of going to group these together. So one of them was, I'm in a partnership. We have an LLC, but we aren't registered with LuLaRoe as the LLC, meaning that it's still under the individual consultant's name that originally put in paperwork. Will that be a problem? And then I'm going to tie that into, if you did have an LLC, but it wasn't an S Corp, how will that affect last year's taxes?
Okay, so you do need to change with LuLaRoe who they're paying. So when you set up that LLC, you should have had an employer identification number that you got, which is a number that's kind of like a social, but it's for your LLC, and it looks like 47-1234556. So you contact LuLaRoe and send to them. They'll actually ask you for a W-9 and some other information. You send them that info, and then they'll start paying to your LLC. And that is important, that they start paying to your LLC and not to your name and social in the future. It's not the end of the world that you didn't do that for the previous year or previous time that you've been doing LuLaRoe. And what was the other question?
If you have an LLC this past year, but it was not an S Corp, how is that going to affect your taxes?
Okay, so the whole idea of why you want to be an S Corp is so that you can save on that self-employment tax. And because you were just an LLC, you're actually considered a disregarded entity. So it's as if you did nothing. So you've set up an LLC, but you're still a sole proprietorship LLC. So you've done nothing as far as taxes go. But you have the limited liability. So you could have just an LLC, but not the S Corp. So that's where it might be smart to do that.
Okay. And contact you to further talk about how to switch all that over. I'm just putting that out.
Exactly. Thank you.
So let's see. This one here. So if we decide on a reasonable salary as an S Corp, do we still have easy access to the rest of the money? If not, what are the restrictions?
So under my little scenario where I said that you'd made $50,000 net profit under the S Corp, you still own all $50,000. It's still yours, and you're still going to pay income tax on every single dollar. So all of that money is yours. Now, remember where I said it's a little tricky, this whole paying yourself a salary. And I use the example of $20,000. So if you paid yourself that $20,000 salary, it does not mean you're going to cut yourself a check. It doesn't even mean you're going to move any money around. It's literally just something the accountant puts onto the quarterly that says, Ashley Brown Enterprises LLC paid Ashley Brown $20,000. And it goes on a report called a quarterly form 941, and you'll pay 15.3% of $20,000. But no money exchanged hands. You still have $50,000 of profit that was sitting in that account, and it's yours to take. You can take every single dollar.
Awesome. Okay. So retroactively, can you become an LLC for last year at this point?
So yes, you could. So there's a way to do it. You would establish that the business was for the 31st of December, and that gives you 30 days from there to set up the business. So you kind of have till January 30th to get it all set up. But in reality, depending on which state you're in, some states take 2 weeks. Texas takes a week and a half. Massachusetts takes a week and a half or 2. Florida takes a week and a half. North Carolina takes 2 weeks. Utah is the next day. Arizona is the next day. So like each state has their own way to get it done. So I usually do the cutoff as January 15th. If you're after that, you won't be able to get the LLC. But again, it's all on an individual basis as to whether or not this fits for you. So we like to take the time to talk to you about it. We find out what your situation is. You know, we take the time. Some of you, and I'm noticing or recognizing some of the names that are in here. Jesse Yeager, for example, Kristen Burnett. Yeah, I'm recognizing these names. Chelsea Spells. Anyway, I've talked to these people, and I'll spend an hour on the phone, and it'll be 11 p.m. I don't care. I'll talk to you for an hour and make sure we take the time to make sure you get set up correctly.
Hey, that was me. So before I jump into more of this, Jake has been amazing to do this. It is January 5th. We are in his 80% and his 20% right now. So he is a tax guy. That January to April is when he is slammed. So that being said, make sure, do you want to touch on that a little bit as far as establishing?
Yeah. So, I mean, the truth is basically the 21st of January is normally when things get really crazy. And I kind of have to say, all right, I'm dedicating myself now to tax preparation only. Now, something, Ashley, you didn't know that we had talked differently before, but I just hired 2 people that are going to dedicate to 100% LuLaRoe. Like, I don't know if you guys can really understand just how crazy it's been this last month. I did a blog post on shoptheroe.com and it just went crazy. And here I am talking to a whole bunch of people. So I hired these 2 people to dedicate themselves solely to LuLaRoe. So I think we're going to be able to handle whatever comes in, and we'll be able to help you guys out still, even though it's the middle of tax season.
And you can just go ahead and drop the mic now. Okay, so you have, there you go. Okay, so we'll get a couple more of these questions here. We've got about 10 minutes. Can you go over just briefly what your charge is for filing personal tax returns? Or do you want to just quickly go over your basic fees on tax returns, business, personal?
Yes. So I went over the business. It's $55 each quarter and then $275 for the S Corp tax return. So now that's only if you set up the S Corp. The S Corp setup itself, we charge $200 for our time. And then there's usually there is a state fee in every single state. Each state has their own fee. Texas is $300, for example. They're one of the highest. North Carolina is $125. Florida is $125. It's usually $50 to $150 for the initial setup cost from the state. Now, let's say you don't have an LLC. Let's say you just want me to do your taxes for last year. We absolutely can. Our personal charges are based on what you have going on. But if you're like the average American, you and your husband both have, or wife, sorry, have a W-2 job each. Let's say you have kids, you have 2 kids, you own your own home, so you itemize, you do some charitable contributions, like just typical. That would be about $115. That's our charge for typical return taxes. But let's say you have a rental property. That's $75 to do the rental property taxes. So it's hard to nail it down exactly, but I am really confident that my prices are. We beat H&R Block any day of the week. We beat any CPA. We're set up to help you guys. So those are the types of returns that we specialize in, that we do all day long. Well, I'm not doing a big manufacturing company's tax return or some company that's traded on the New York Stock Exchange. We don't do those returns. We do the average everyday American return.
I can speak to that a little bit. You guys have done a lot of research. We've used a lot of people. By far, his prices are more than fair and have beat everything else we've seen, and he has more to offer. So that's just my 2 cents. Okay, a couple more questions. So this one, maybe you can just explain this a little bit, because with business bank accounts in the EIN numbers, there's a question that says, should we switch our bank account names to LLC? Can you talk about, once that's established, the bank account that you'd have to go with that?
Yes, if you have an LLC set up, then you want to take your LLC setup documents into the bank and have them convert that bank account into a true business bank account, and into that EIN and name of the business. Some banks will do it. Some banks will actually make you set up a brand new bank account.
Okay.
But yes, you should do that.
And I know you guys, for us here, we did our own LLC. I wish I would have had Jake do it because we'd be a partnership and not a partnership. But you know, we filed our LLC. After that, you do have to have your EIN as well. So those are separate things they can go. So here's a good one. So how does it work if you're not keeping any profit for yourself, using it all for reinvestment and a little for debt payoff?
Right. So some of the problems that we see people have is in that example that I used where you have $50,000 of net profit. Well, LuLaRoe people are typically taking like 30,000 of that 50 and reinvesting it into more inventory, right? So it feels like you only made 20 grand because that was what was left over after you reinvested it into inventory. However, because inventory is an asset, you still have 30,000 of profit. It's just into a new asset, a new thing that you've invested into. So you will pay taxes on that 50,000. Does that answer that question?
I believe so. And I think you guys, that was a big thing. I want to, for the sake of, I know our girls had this question, but for the sake of most consultants who are just starting to understand this concept, the inventory that you repurchase you have on hand, like these Sarahs behind me that are not sold yet, this is not a tax write-off until it is sold. So right now it's just here, right? Get it done.
That's how I stay up late.
Yes.
Drink my Rockstar.
I drink Spark. But see, ADD, man, it's just a thing. But so inventory that you have on hand that is not yet sold, can you explain kind of, that's not a tax write-off, even though you purchased it?
Say that again, sorry.
So anything that I've purchased that is here and I've not yet sold it, it is not yet a write-off, correct?
Right, yeah. Because, and I use the example of like let's say you had a dollar, like you have the green dollar, and that's your profit, right? It's easy to understand that I'm gonna have to pay taxes on this $1. Now, what if I take that dollar and I go trade it in for $1 of gold, a gold coin that's worth $1? I can't like go to the store and spend that gold coin, could I? No, they're not going to accept a gold coin. They won't even trust that it is gold. But yet I'm still going to pay taxes on that because it is real, and I just traded one real dollar for gold. Same thing with what you did is traded one green dollar for a legging. It's still worth $1. In fact, it's actually worth more. You're probably going to sell it for more, but it's still profit, whether it's just one's in the form of something that you could easily trade in for paying taxes. That's green cash. You can't really pay your taxes with inventory. Oh, and this brings up there's a lot of, again, bad advice out there where they say, hey, make sure you sell off all your inventory by December 31st because you're going to pay taxes on your inventory. Well, think about it. Taxes aren't due till April 15th. So what you really care about is that you sell off enough inventory by April 15th so that you have the cash. So you need to convert that inventory to cash so you can pay the tax that you're going to owe. It doesn't really matter how much inventory you have on hand as of December 31st with regards to, are you going to be able to afford the taxes? It's how much you have on hand on April 15th.
Perfect. Okay. This is a good one. We had a lot of questions on this on our team. What if you ordered inventory on December 31st, so the purchase was in 2016, but that actual inventory hasn't arrived yet? What tax year does that fall into?
So, great question. It's asked all the time. Let's say you're doing your books the way I told you to, where you have your bank statement and you have your piece of paper. Well, when you bought that inventory on December 31st, it did come out of your bank account on December 31st. So if you're doing your books this way, you're going to record inventory expense on your piece of paper because it came out of your bank account. Well, if you do that, then you need to make sure that inventory purchased but not yet received is part of your inventory count. So you need to count that as inventory on hand as of December 31st. If you do your accounting this way. There are some people that won't do their accounting that way. They have a system set up so that they don't count inventory purchased and has come out of the bank account, but not yet received. But if you're doing it the way I am saying you should, then you do need to count the inventory not yet received, but purchased.
Got it. Okay. So I've got a couple of people asking me, so if you have an LLC or you have a partnership right now, but it's not in an S Corp, and tax-wise, obviously it would make much more sense to be in that S Corp, is that something you can transition over for us for the 2016 tax year?
So yeah, that's where I was saying it's still possible to do it, but honestly, we have, 10 more days to get that done, to like get the process started.
Perfect. Okay. I think you covered, there are some questions in here, guys, that I'm seeing that I know that he did answer live. So I'm trying to just find the ones that I'm not positive that we touched on. So you need to call Brianne. She's in your queue.
I called her 3 times. You need to answer.
Brianne. But we are right here at about an hour, so we're going to close this out. But like I said, if you are in one of the invite groups for this event, for this webinar, there is going to be a form. So if you're a dream catcher, a pumped up chick, an Ellie, any other team that this has fallen into that you've gotten that invite, you will have that form. Please use that form instead of just dumping phone calls and voice. It's like calling home office. When there's an efficient way, use the efficient way. Don't call home office. That's my 2 cents. So use the efficient way to get in contact with him, if at all possible, okay? He has included his email address, jake@jbaccountingandtax.com, to get in touch with him there too. But just know that he is going to be looking at that form, and start contacting those people first who go that route that we've officially set up for you. So that's pretty much that. That's the awesomeness. So Jake, thank you so much. We greatly appreciate you taking out the time to do this, and good luck with the Lula influx that you're about to receive.
Thank you. I appreciate it. Thanks, guys.
Thank you, Jake.
Thanks.